Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host, Daniel, bringing you the highlights and the happenings from around the world. As inflation continues to moderate across several regions, central banks are adjusting their policies and global markets are responding to the latest economic data. This week, key releases from the US, Europe, Japan, and China are set to provide critical insights into the global economic outlook. Investors are closely watching for signals that could either reinforce confidence in a steady recovery or raise concerns about ongoing challenges. Let's first review last week's market movements, then look at the events that could move markets in the coming days. The S&P 500 rose 0.85%, and the Nasdaq Composite climbed 0.80%. Driven by excitement in AI-related stocks and solid earnings from companies like Netflix. U.S. bond markets held steady as housing starts and building permits fell, signaling a slowdown in the housing sector under the pressure of the Fed's continued rate hikes. Retail sales rose 0.4% in September, showing resilience in consumer demand, though industrial production contracted 0.3%, partly due to disruptions from Hurricane Helene. European equities rallied, with the Stoxx 600 up 0.58% following the ECB's second consecutive rate cut, reducing the deposit rate to 3.25%. Lower than expected inflation figures across the Eurozone, coming in at 1.7%, reinforced market optimism. The DAX gained 1.46%, while Italy's FTSE MIB surged 2.61%. In the UK, inflation also dropped to 1.7%, its lowest level since 2021, boosting the FTSE 100 by 1.27%. Japan's Nikkei 225 declined 1.58%. As inflation eased and exports weakened, core CPI dropped to 2.4% in September, down from 2.8%, and exports fell 1.7% year-over-year amid slowing demand from China. The Bank of Japan reiterated its cautious approach to monetary tightening. Chinese markets saw mixed results, with the Shanghai Composite gaining 1.36% thanks to continued government stimulus, while the Hang Seng tumbled 2.11% due to persistent concerns about the property sector. China's Q3 GDP beat expectations at 4.6%, though still below the government's 5% target. As we look ahead, several major events are set to shape global market movements this week. U.S. durable goods orders to be released on the 25th will provide insight into the health of U.S. manufacturing and business investment. It is a key indicator of future production activity, especially in the transportation and machinery sectors. Markets will look for any significant changes after previous months showed resilience. Flash PMI data for October from the Eurozone and the UK will reveal the current state of manufacturing and services sectors, both critical for gauging regional economic growth. Japan's manufacturing PMI and CPI reports will provide insights into economic conditions and inflationary pressures as the BOJ balances gradual policy adjustments. China will release industrial profits and PMI data, which will reveal the strength of its manufacturing sector and help gauge the health of its recovery. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.